All right, so welcome everyone to FinTech Close-Up event. FinTech Close-Up event is a series of events where we are inviting key persons from different startups and FinTech companies in Baltic region. These events are organized by Baltic Finance Center at Riga Business School. My name is Nauris Bloks. I'm FinTech Business Education Lead at the Baltic Finance Center. And today with me is Director of the Riga Business School, Inese Muzikante. So a few opening words from her as well.
Okay, hello. Thank you for coming here today and good afternoon. And I'm very happy to welcome all you here to our FinTech Close-Up event, which is meant for students also, not only students, but for everyone who is interested. And the industry involvement is very important, and I think it's inspirational and motivational for our future innovators and entrepreneurs, for our students. And to be honest, we are very proud here at Riga Business School that Baltic Finance Center created world-class education and courses. And so, yeah, this is something that we are proud of. And these courses are created in collaboration with industry, with regulator, with policymakers. This is also an important part that actually shows the quality of the education, and nothing of it would have been possible without the people behind those educational initiatives. And one of those people is Nauris Bloks, our today moderator, who is a kind of lead of these educational initiatives. And this is also a very special day for Nauris today. So this is his birthday. So I want to congratulate him.
Thank you.
Here's a small present.
Thank you very much.
Thank you, Nauris. And I wish us all to enjoy this evening.
Thank you, Inese. All right, so today we have a very special guest, one of the hottest startups in Baltic region, one of the rare crypto startups in this region. So welcome, CTO and co-founder of Gravity team, Krišs Pujāts.
Hey.
Hi, Krišs.
Hi, Nauris.
How are you?
Very good, very good. Yeah, the spring is like starting. You can smell it in the air.
Very good, very good.
Yeah.
So usually we kick off this discussion with some background about yourself, because students are interested, okay, how I could get to this position to co-found some cool crypto startup. So maybe tell about where you have come from, what is your education background and career background.
Okay, yeah. So I would say that it all probably started in Riga First Gymnasium. That's like one of the best or the best Latvian mathematics school. I somehow found out that it just comes super easy to me. just without learning, really, everything in that sector came easy. Not for other sectors, for that one.
For mathematics, right?
Mathematics, geometry, physics, chemistry. And yeah, it was simple. And then I not necessarily knew what to do with that. And I started studying business, and I thought that I will become like a sales or establish my company, which I ultimately later did, but not in the beginning. And then I realized that I feel very, very well with like computers and technology, and that was actually a very big turning point, because that's when I understood that, oh my God, look at me, I can actually spend like 12, 13, 14 hours a day, because it's so rewarding. I mean,
to get the dopamine back here from all what you
can create.
Yeah,
you're struggling with some problem, or something is not like compiling, something is not happening, and then when you finally figure it out, and it somehow clicks in your mind, like, why didn't it work before, and why does it work now? And that's how my programming years started. But my sort of business background was still there. I started a couple of startups along the way, some of them successful, some of them not so much. And yeah.
Can you name some successful ones? Which ones?
One of the semi-successful ones was Walmo.
Yeah, okay. The loyalty system, yeah.
Yeah, a loyalty card system that some people say that, oh my God, there's no way you can fail that. I thought so too. But yeah, as a developer, I was one of the leading roles building Twino, one of the first developers there. That's like investment platform, and yeah, sometime later, I also thought that what I would be needing is like good skills in developing front end. Who knows, might come in handy. Then I went to Evolution Gaming because that was like toughest and most front end intensive company in Latvia, and then I thought that, okay, I think I'm ready. Let's go. And I started tinkering with crypto trading bots. That was a pretty cool thing to do back in 2018. The first ICO hype was fast, and the big Bitcoin spike when it hit 19,000. Then I thought that okay, this might not be the best market to enter, but I want to do something. And I started tinkering with crypto trading bots. At first, it was just that, tinkering, like, okay, what can I do? My first strategy was actually pretty like naive.
Yeah, so you were like alone just creating these strategies, or you had already some team together with someone, or you just like a side hustle?
Well, it wasn't even side hustle. I just took off.
Hobby.
I just had. I was considered a pretty good developer when I left my last job. I thought that if I fail, I can probably find a job. So it's some sort of an insurance, right?
Yeah.
So I have some money I can use for trading. Yeah, and that's how it went. And yeah, the first like a year or maybe more, maybe a year and a half was all kinds of failed attempts, and then what really sort of was successful was the most naive way how to do trading. This was like triangular arbitrage, and I might not have been very particularly a knowledgeable finance guy at the time, but I was pretty good developer. So I could do these high frequency sub-millisecond trades, and triangular arbitrage means you do like many trades in a millisecond. Yeah, I remember that time when I just patched some of the code, pushed it to production, and I see like, oh my God, it's trading at the speed of like 500 million a month. And then patch something else. Okay, now it's going at the speed of like volume, right? Like $1 billion a month, and that was like unbelievable. And then I thought that, Jesus, but I'm not losing money. Now wait a minute.
There is a business, right?
It's actually pretty good.
Yeah.
And in the beginning, it was like game sort of, right? I wouldn't necessarily call it a business, like a properly like thought through business. The market was the client was the market, so to speak, right? And then along the way, I met other guys who were also tinkering with crypto algorithms. They did things differently, and we exchanged ideas and figure out how we can help each other. And yeah,
that's how Gravity team was
formed.
Yeah,
that's how Gravity team was formed.
Yeah. So you met the other co-founders by luck, or just you had some introduction from someone? So how actually did you get to co-found the Gravity team?
Yeah, so technically you could say that other co-founders were already working together with their trading algorithm, right? And I sort of joined it later, but I was also doing trading for some time. We met at Tech Hub. That is reasonably popular co-working space here in Latvia. It was probably the most popular back then. And would you call that a luck? Yeah, probably you can call that a luck. Yeah, I would say it's fair assumption that some of the success is due to luck, but then again, you could say that you can tame luck by just being open-minded, by talking to people, by going out and going to places you have never been, talking to people you haven't talked. Like you sort of invite luck to your life in a way.
If
so.
you don't do nothing, then actually you cannot meet people. Yeah.
Exactly.
Right. So can you describe in the core concept of the business model? So what is the Gravity team's core business model?
Okay, so fast forward to today, we trade in about 30 exchanges now, crypto exchanges, and we do approximately 1% of the world's crypto spot trading volume, and in some of the exchanges we are like quite like the biggest player, and bless you, and I would say the core business is to provide the liquidity to the markets. We quote in those 30 exchanges approximately 300 sort of assets. So it can be anywhere up to 10,000 different active open orders somewhere in the world. And yeah, we typically hold pretty narrow spreads across all those trading instruments, and you could say we provide liquidity to those markets. We later realized that the operation that we do is actually very good for market making different crypto projects, and also providing liquidity for sort of newly established crypto exchanges, because it is important both for crypto projects, and for crypto exchanges that their trading books are full, right? You don't want to go.
You can do some trades actually, right?
Yeah, you don't want to go to a marketplace just to see that it's empty, nobody's trading anything, right? So when a marketplace opens, and crypto exchange is like a marketplace, they need a lot of people who are ready to buy and sell something. So we are the guys who in 30 marketplaces across the world trade everything they've got.
So you have a bunch of crypto assets, right? You're holding a bunch of crypto assets. You also are trading.
Okay.
Yeah, is that correct or not?
Almost. So we might be having many of them as loans because we don't want to be exposed.
Okay, so can you give some numbers, like for usual people to understand what is the volumes that you are trading there? So it's because it's not millions, it's not tens of thousands, that's billions, right?
Yeah, it's billions. Yeah, we all our systems combined would be trading around somewhere between 10-15 billion a month, approximately. Yeah, and obviously I have to maneuver here what I am allowed to say, what I'm not allowed to say. So
that seems pretty impressive number. So it's a good.
Yeah. And obviously it depends heavily of the market conditions. There are like times when certain countries like their presidents, and then certain activities and markets happen, and then there are other times, but yeah.
All right. So if let's go back between, like, you established with co-founders the Gravity team and today. So most likely there were several major turning points to how you actually established the business. So maybe you can share some insights. Okay, what were the key, some milestones that was created or was along the way?
Yeah, I think I would say that some of the biggest not inventions, but like changes that happened during the bear market. So crypto is yeah, used to be and still is not particularly heavily regulated space, and that means that the prices can fluctuate quite a lot, and different hype cycles, different real world events can influence that pretty heavily. So the crypto market, as other markets go through like bullish and bearish cycles. And during those bullish cycles, like everyone is a genius. Like I started trading. You do anything, it just earns money. Good for you. And through bear markets, yeah, then many trading companies close down, or trading enthusiasts run out of enthusiasm, and that's when you have to consolidate. And the first bear market, starting from 2018, somewhere in 2020, yeah, that's when we really sort of looked very closely under the magnifying glass, like looking at each trade, like what made which trades made money, which didn't, and we made different monitoring systems, boost efficiency significantly, and I think that bear market taught us to try to stay sort of ahead of competitors by being really considerate, try to pay sort of attention to detail, and monitor a lot of things, and be smart about how you do things. It's not like anything goes. Actually, pretty few things really go. And then when the bull market hit during the COVID times, those were amazing times, like amazing. COVID was the best.
The only last entertainment that was left, actually, to sell and buy crypto, right?
Yeah. They printed a lot of money, and most of that money ended up like in crypto. So yeah, and then was very good time for us, and then came the war, and that's when again crypto sort of winter started. And then yeah, that I would say was also like time to consolidate. We realized that, okay, maybe we should do more predictive stuff, right? Up until then, we were mostly market neutral. You buy somewhere, you immediately sell somewhere else. But then you have to think, maybe you don't have to sell immediately. Maybe you can sell like a different asset that's highly correlated. Like, how do you know? Like, all kinds of statistics and machine learning and other things came in. And yeah, I would say that was pretty important as well. Yeah, I wouldn't say we are currently in a bear market. So if I have to mention three things, well, currently we're trying to change the business model and try to concentrate on the paths that would lead to be sort of more customer centric. We have built a wonderful execution system. All our bots trade against each other, and we realized that, hey, actually, well, anyone can trade against us, really. And that's I think that is like a big sort of mentality shift, to be more customer oriented. And I think that's very.
What's in your situation? Is a customer? It's a business, some kind of, or it's a private individual who is trying to trade against you?
At the like up until now, we would say the customer is the market, right? That really sort of sets us apart from other companies, because we don't necessarily have to do active marketing, at least not until now. And yeah, that's why probably this business model is different from other fintechs. We do trading, right? If you can find a way and to buy cheap and sell expensive, then you make a profit, right? So who is your customer really in this situation? Well, the market. I mean, and that's sort of convenient for us, but it can get us only so far. And I think we have pretty much reached one of the yeah, we have reached some sort of a limit where we are squeezing the last bits out of the market. So we are trying to figure out, okay, where do we go from now? There are several directions, and one of them is targeting targeting business models that involve customers. Those would be like remittance services that would be involved in transferring money from continent to continent. We have a relatively nice position that allows us to do that. We believe that in the future, crypto sphere would be completely involved within the fintech sort of flow, the fintech world, and a lot of financial infrastructure problems could be solved and will be solved by crypto. So we are preparing for that eventuality.
Future financial system, yeah. So the backbone of not like now, it's like through IBANs and banking system, but actually through the blockchain and crypto space.
Yeah, that's our assumption, right? You have to have some sort of a vision, and our vision is that, well, currently money goes to sleep during weekends. If you do a payment on a Friday evening, the merchant will receive the money maybe the next business day, which is Monday. If it's a different currency, then maybe 2 days more. And you pay like 2.5% for that, like Visa or MasterCard. I mean, you don't have to invent the wheel. The wheel is invented. It's called blockchain, and you can try to resist it. But I mean, like what happens when you send money from like Latvian bank to American bank? It goes through so many intermediary steps, like this correspondent bank in Europe, correspondent bank in USA. Then they do the nightly clearing operations and netting this, netting that. And somewhere in the middle there is this FX, foreign exchange transaction and fees, and it goes through so many steps. And blockchain is pretty much
blockchain.
Yeah, two banks can interact, or not. You don't necessarily need the bank. You can interact directly to a person. I mean, we see so many benefits, and we realize that blockchain will become a very significant technology used in fintech finance.
All right, very good. Let's check in with the audience. So maybe audience has some questions. Yes, there is a question. Just a second, the microphone.
Could you please go into the tech stack that is used while implementing those trades, and basically maybe something we started with?
Okay, how to start a thinker? What do you need to start a thinker with the algorithm?
I would say it's actually the crypto world is extremely democratic. Like a couple of guys from Latvia can make it. I mean, it doesn't get more democratic than that. To start tinkering, you don't really need anything. You don't necessarily need like super crazy skills. You need a laptop and with an internet access. And so most of the crypto exchanges open their APIs to, well, anyone really. And you can just spin up like a JavaScript or Python, or if you are a bit smarter than Java, C, C++, a project, and start coding away. You can try to do some sort of prediction stuff, or you can try to do, as I did, like triangular arbitrage. Probably it might be a little bit difficult now because a lot of the market is consolidating. A lot of big players are making market rather efficient, and but still, it's not forbidden to start thinking. If you ask about tech stack, yeah, we use Python. We actually try to stay really vanilla. Vanilla in technical terms means don't use anything too fancy, right? So anything is really replaceable. Any decision you make can be reconsidered. You're not engaged with anything specific. That gives you freedom. If you made a mistake, that's not a big deal. So Python is one choice, and Rust is another. Python for tinkering and for data science and for
analysis and all that part.
That would be the data science, and also for like prototyping, doing like quick and dirty solutions. And the Rust is for like mature technology that has to be performant, age of T, sub millisecond or stuff go there. I wouldn't even say it's particularly fancy.
We lost half of the audience to this, yeah, so maybe,
Sorry.
yeah, no worries. That was a good question and also a good answer. So, okay, some other questions from audience? Yeah, there is.
So what do your algorithms do? It's just simple buying or selling, or do you do some advanced stuff, like for example, short crypto?
Well, of course you can. I will try to decipher the question. So what our algorithms
It's
really
just buying, selling, or there is some more intelligence to that?
Well, there is of course a lot of intelligence there. Obviously, you can't just so okay. I'll try to be short here. So yeah, like typical trading book, trading order book consists of bids and asks. These are people who are broadcasting to the market that they are ready to buy or ready to sell something. So when you as a trader go into this environment, you see all of those options, and you may or may not directly initiate a trade with anything that you see there. On the other hand, you can place those orders in specific depths that, if triggered, they would be beneficial to you. So we typically are a market maker, which means that maker means that we are the guys who put orders there. We tend to not execute others. We try to put our orders there. So now you have like an exchange with 300 trading pairs. In each pair, there's a bid and an ask, and we are somewhere there, somewhere in specific depth. So imagine there's bid here, ask here. Then we have to figure out like how wide are we going to be, how big those trades are, those orders are going to be. Are there going to be one or many? If many, then how far spread out? Are they skewed in some way or form? Maybe you need to accumulate a certain asset, right? So you would incentivize buying, de-incentivize selling. Like in which exchanges? What if you run out of money in one place and you have too much of it in another? And there are like a ton of things to think about.
Thank you for Trading 101. That's really good to know. Let's move on to the next question.
Several questions, but some of them, do you trade only on
yeah, so we trade only on centralized exchanges. The short answer, we obviously totally know about DEXs as well, but currently we haven't found the justification to go there, because DEXs are quite a different beast. They don't typically need market making as we know it in centralized exchanges, because any interaction with the blockchain costs money. So placing an order and canceling it, both of these operations would cost money there, whereas in centralized exchange, it doesn't cost money. There could be other sort of approaches to it, but the liquidity management is typically automated. You just dump your assets in a liquidity pool, and the trading happens in a different way. So again, it's we probably will do it sometime this year or next year, but haven't done it yet.
the requirements when you choose currency pairs with trade? It depends on liquidity. Now is thousands of currency pairs.
Okay. We typically don't. Yeah, well, we tend to trade most of the things, almost all of the things that we can. Probably, if the volume is like really low, then it's not worth locking up assets that particular currency. Yeah, so we would be looking at volume. Mostly, if we are already trading in an exchange, we would be looking at the volume for it. Obviously, as a market maker, the holy grail is to find a place where there is a lot of volume and very poor liquidity. That's exactly what we what we provide. We service the market liquidity, but yeah, if there is a very little volume, or if there is like very already very good liquidity, then we would probably distance ourselves from. So our job is done there, or not needed, then go there.
So you make this decision by yourself, which, for example, there's the famous President Trump coin. So now it's launched. So you decide, okay, we will provide the liquidity for that. So, or actually there is someone else who triggers that decision.
So decision to start trading a specific pair is manual. Some total traded amount or aggression or other parameters that's automated, yeah. But the first decision is manual. Manual,
okay.
Yeah.
Yeah. All right. We will get back to the audience a bit later, but returning to our discussion before, so the Gravity team's growth has been significant throughout like 8 years when you have been founded. So how you actually scale up such a business and how you scale up in such rapidly changing environments? So what is like those key drivers and enablers for this key growth?
Okay. I think the short word is automation. We automate everything out of everything. Obviously, the bots are automated, but then again, automated is many other things as well. Yeah, we for the we are not that many actually.
How big is the team actually?
We're getting close to 70. Yeah, we're getting close to there. So
all located in Riga only?
No, in Riga could be somewhere around 40 maybe.
Yeah, and others are remote or also
the others are everywhere really.
Okay.
Yeah, remote. Yeah, and yeah. So if you would consider the head count, then probably that's not like unimaginable growth, right? 8 years, you go from 0 to 70, 60. But the volume-wise, I think it's pretty significant. We're about 1% of the world's volume, and I think it all comes down to automation. Our systems are relatively robust. Our processes are pretty clearly defined. How we like enter a new exchange, why this specific exchange, not the other. How you do the integration with the exchange, and how you do everything you need to start trading in specific exchange, and that would be like horizontal growth, and then then how to make your bots complement each other and then become more efficient as more and more exchanges are integrated into the system. That would be the architecture solution, which you could also call automation. Yeah, we have this thing in the middle of everything that is like a central hub for all the communication and all the trading that happens, and I think that was a very good call. That has helped us tremendously, and that's how we distribute the sort of the information about the market and about other exchanges to every other exchange. So I would say that this technological and trading sort of thinking about trading that has helped us, and I would also say that maybe this answer is not very helpful. I think it would be a little easier to understand that what has helped us very much is to understand that we're not here to we are here to make money, but in order to do that, you have to answer a question: whom are you helping? Which is which is actually on the other side of the market, who is the one who is buying from you, and when is he buying from you, and why specific strategy works, why what are the underlying micro or macroeconomic reasons why your strategy works. If you have we have traders that come to us and say that I have this or that strategy and it works. Look at the past, it has worked. We typically ask this question: can you answer what are the underlying forces that sort of
why it works,
make that strategy be able to work? I mean, if you can't answer that, well, maybe we can consider it, but most of the stuff that we do answers the question, whom are we helping? Yeah,
that's the mindset, how you actually are approaching the creation of that. Oh, interesting. Can you maybe share some insights about decision making? Has there been any decisions that has boosted the growth of the business, or it has gradually just boosted, no, not boosted, but grown throughout the years? Or maybe, I don't know, the decision to launch in this exchange somehow significantly changed your business trajectory?
Yeah, we are interesting question. Specific decision. Yeah, sometime in the beginning of the conversation, I mentioned like AI was like extra monitoring and extra AI helped us. That was from technical standpoint. Yeah, but I would say also one big thing that we do is we try to have like a good relationships with all the exchanges that we work with, and I think that has helped us as well. And could you call that a decision? Yeah, maybe you can call that a decision to be actively engaged, and that has and relationships turns into some sort of mutually beneficial arrangement, so to speak, right? And some of the exchanges we have like negative trading fees, for example, because we are relatively big volume, and the exchange is ready to pay us for trading, and you could we call it like within the company we call it unfair advantage. It is it sort of makes us more secure that other companies, other competitors would have very hard time to actually outcompete us, and that has also been important. Was that like a really like a let's do that, that's our decision? It just sort of
happened.
It just sort of happened, yeah. And decision to stay in Latvia, there was a decision. That was a decision.
That was decision.
That was decision.
And why? What's the basis for that? Why do you decide to stay in Latvia?
It's still unclear. I mean, it doesn't make sense for us to be in Latvia. It just doesn't. We shouldn't be here. But probably patriotism. Yeah. Probably we were thinking, okay, can we really fight those other guys that are pretty much in the world's finance hubs, right? Like London and Singapore and New York, and we realized that for when it comes to developers, actually we are in a very good position. Maybe you can't really find developers who have experience in building crypto trading algorithms, which you might in London or in Singapore, but that's important, but you have to be really smart, have like a good aptitude, good logical skills, and then that you can find in abundance here. And yeah, we think that we can actually make Latvia very, very interesting for crypto companies, and we can like talk to the regulator of Latvia and suggest certain things that would be beneficial to any crypto company. Well, also us, but any crypto company, and maybe we can attract a lot of interesting companies to Latvia by making like legislation frictionless and interesting and it looks like it's working, and probably that was also one of the reasons, because we started talking to Bank of Latvia, the Ministry of Economics, and said that, listen, you don't need to give us money, right?
We have it.
Yeah, we have it. Let's do it opposite. We talk to each other, and we try to make Latvia interesting for other big crypto companies in the world. Let's make them sort of relocate over here, because most of the countries are struggling with their crypto legislation, and let's make it cool. Let's make Latvia like a default option, and probably if we would have met a lot of resistance, we actually could consider moving away. So we the people we talked to said that, okay, looks interesting. Let's check it out. Let's try to do some at least something. And yeah, so I would say that would be one big reason why we stayed. Yeah.
Okay, that's very good. So yeah, what is also missing from this environment? What you would need to actually that you know why you stayed in Latvia? So is there something that, okay, the legislation is one thing which is kind of moving, that's good. The skilled workforce is there, but maybe you see from your standpoint and from business standpoint, what else is missing here to be the greatest hub?
Well, traders.
Traders.
For us specifically, traders. We don't have people who has experience in any type of trading, really, not just crypto, any like TradFi, like high frequency trading experience is just not here for very legitimate reasons. It's not here, and
there's no financial hub to actually do the trading.
Yeah, and it's also, well, next to impossible to invite anyone with such an experience to here.
Like from London?
Like from London, would you want to relocate? Yeah, but you can do remote work and stuff like that. So I would say that general lack of expertise, that's hard. We try to look in Latvia, we just abandoned the idea. Yeah, now we do those things in remote, or try to grow them domestically. Yeah. So that would be like one of the biggest problems. So yeah, if any one of you want to pursue a career like that, go to London, stay 5 years, come back.
The main is to come back.
Yeah,
so,
come back. Yeah. Or
Gravity team is waiting. Yes,
yeah.
Right.
Yeah,
right.
if there would be many companies like us, as there are in some of those financial hubs, then probably it would be easy in that regard. Yeah.
All right. Okay, let's check in with the audience. We have some questions. Yeah, please.
I forgot the first one, but the second came along. No, the first one. Not a technical question, because I'm not a technical person, but from the business perspective, I really want to ask this boring question of what you think made you successal. Is it, you mentioned the liquidity pool which you have, the right decisions at the right time, sure, automation, but yeah, I don't know that much about history. And I will follow with the second question. Thank you.
That question is about me personally, or the business?
Business.
The business.
Now looking back, you know.
I would say that there are a lot of people who are trying to build crypto trading algorithms directly because the barrier of entrance is relatively low. Anyone can really do that. You just open an account. You can do it like this evening already. Start doing it. I think what helped us and what set us apart was I would say the market orientation. We try to answer the question not how to get money the fastest, but who is our customer on the other side of the market, and what are the driving factors, why specific opportunity that we observe in the market is destined to stay there or progress in one or the other way. In other words, we make educated educated guess about the market that certain things will remain as they are because of some underlying factors, and could answer that question. Yeah, we already talked about it, and I think that is one big reason, because if you just trade, then it can lead you to a situation where you receive a lot of competition, and this competition makes your profits less and less and less, and when the bear market hits, then you
don't know what to do.
You don't know what to do. You sort of you run out of juice, so to speak.
Yeah.
And I think that underlying knowledge helped us, I would say.
Thank you.
Yeah.
And the second question, much shorter. You said that Latvia is lacking those traders. Do you think that there is also a lack of financial literacy in the, let's say, in the region, not in the country? Would that help to get to that stage? Would that should be included in education? Or?
Typically, we would say that when I say lack traders, then out of 1.8 million people, there are like couple only in Latvia. When we talk about financial literacy, we probably don't consider like 5 or 10 people that might or might not have it. We probably talk about like entirety of the population, and in that regard, I would say financial literacy or lack of it probably is prevalent across the world. Like probably, yeah, that's not a thing that everybody thinks about all the time. So I don't. Yes and no. Probably if there would be like significantly like higher financial literacy like capability for like average Latvian, maybe it would help. But I don't know. Everybody has to. Everybody has a choice what to sort of invest its time and life into. Others want to be really good football players, and that's not bad. I mean, let them. And not everybody has to be a politician, and in other countries, even in those where there are traders, I wouldn't say those countries are like financially significantly more literate than Latvia. Yeah.
Okay. From my perspective, it seems that more the driver would be if there would be more similar services actually which require those skills. Then kind of you generate, okay, there is these services in this region, and then you somehow attract those people. They are starting to think, I want to work as a trader. Okay, there is actually someone who gives me a job, so actually I will go and work. And then after 10 years, you have not couple of traders, but you have 10 traders.
You need to build like an economy of that specific field. Yeah.
All right. Okay, some other questions? Oh, a lot of questions. Let's go there. Okay, there. Okay.
Hi, I have a question. So I have. Oh, it's Mike. Hello. Do you hear me now?
Yeah.
Okay. So I have a question. I have a friend who's algo trading like 7 years, and he also tried to implement AI in trading in the sexes, but he said that it was not that successful. Could you maybe share more about what was your success and was more in data
Very
science?
good question. I got it. Very good one.
Just briefly, was it in data science? Was it in decision making, or what exactly?
So the first mistake that everybody does when try using AI for trading is predicting the price, right? That is like the most obvious thing to try to predict, and that's notoriously the hardest one. The slightly better approach would be to try to predict maybe volume or maybe volatility. Then you can sort of combine that together with maybe trading options or trading other instruments, or maybe you can try to determine like a spread between a spot or some derivative instrument, or among different derivative instruments, or try to predict liquidity in the market, right? And try to think of a way how you can use that prediction into making something that would be profitable. But directly price, that's also possible, but yeah, it's probably the hardest piece there is.
All right, let's move on. The next, yep, there. Catch the mic.
I have a question myself, but I can. Question is that delay. If you have the lowest delay, you can like learn more or just be more profitable. And question is how big is the difference if you trade from Latvia or, for example, in Singapore, where is a global a market for it? How big is the difference if you have an office or server in Latvia or you have an office in Singapore?
We don't have servers in Latvia. Like, why would we? I mean, like, no, we all our servers are wherever it's the maximum best place for them to be. You make a judgment where that place is, make measurements, figure out the place, and that's where your server is. So we are not trading from Latvia. If we would, well, it wouldn't be called high frequency trading then.
Slow frequency.
It would be medium kind of thing. Yeah. Then there would be no chance.
Have you experimented with that actually? That you put servers in different locations, proximities, and then actually see the results? Or
yeah. We measure that. Yeah. We measure the profitability by milliseconds, right? And sort of track how that develops or degrades, and especially in the HFT market, if you have some sort of predictive algorithm, then you can accumulate a position over hours and then sell it, I don't know, 3 days later, then it's not that important, right? But if you are in a HFT business, you have to be pretty low latency. Yeah.
All right.
And another question. I saw on your website that you said that idea to create a company, it's because you saw that there is difference between sell and buy share market. How do you validate this idea that you can get inside this market, and just?
So as I'm not entirely sure what are you referring to by market? Do you mean like specific exchange?
You have idea to create a company or just to try to do something. How do you validate that it's or possible or it's profitable? Like
how much money you spend to actually validate the algorithm will be successful or not before you kill it?
Like there is a lot of competitors, and you just go inside like a newbie into this market.
So okay, I think I understand the question. So yeah, we have like several algorithms that are running strong, and we are happy for them. There are others which we would say they are in like experimental phase. How to validate that? Well, we have procedures, but it's not like we have had like all of those scenarios are equal, and we can apply the same procedure everywhere. I wouldn't say we have nailed that one down. Always there is this sunk cost fallacy, meaning that, okay, this bot is not as good as we thought, but maybe if we just do this one more feature or that one more thing, then it will be. And you can pretty much drag this out for years, right? There's always more ideas than you have capacity to implement them. And yeah, so that's definitely a thing. Or another thing is the bot is performing very great with $1,000. Now, when you scale it exactly the same code, everything's the same. You scale it to $1 million, and it doesn't work. And you scale it back down to 1,000, it works again. And that's an insight. Like, why is so? What are the underlying reasons why this is happening? And then you realize that, okay, somebody's doing that with big money, probably. That's why you don't have competition at the low amount, and you have it somewhere with higher amount. So yeah, you can reason like that. But I wouldn't say we have fully answered this question. It's hard to kill a project which promises good results, and when do you kill it? It's difficult. But we have killed projects. It hurts.
All right, thank you. Before we jumped to another one. So how many actual algorithms are running at the same time? So is there some count of algorithms which you can say? Okay, the 10, 100, just to understand the volumes of that.
Yeah, it's tricky. Yeah, it's tricky question. So
Or algorithm types.
yeah, algorithm types would be better.
Yeah.
Yeah, because in all those 30 exchanges, some are actually the same algorithm, just in different exchange. I would say 5.
5.
5. Yeah, 5. Yeah, but they are all. We typically don't try to build an algorithm like in a greenfield project, so to speak, which is like completely isolated from everything else. We have the central hub. Everything has to be able to trade against everyone else. Everyone who joins the trading in this hub should give better chances for everyone else to trade. So so that sort of synergy thinking, right? And yeah.
All right, very good. Yeah, let's go. Christian?
Yeah, so maybe a high-level question, but I'm curious what you think. You said that you expect DeFi and blockchain to eventually replace a huge or the whole financial system. And as the industry consolidates and is gaining more mainstream adoption, I'm thinking back to what the promise was in 2008 with Satoshi, because a lot of it was about efficiency, but also it was in the context of the great financial recession and regulatory failure and generally a failure of the financial system. So as this becomes more mainstream and very large, as you said, consolidation, how does the industry avoid making the same mistakes that brought down the old financial system?
Okay, actually, a very good question. Yeah. I wouldn't necessarily say that the vision how we believe it would the blockchain would help would be able to completely like negate such eventuality. What I was referring to was like blockchain can replace Swift or like wire transfer. Like a technology, it can be like used in that manner. If you replace like Swift with something else, does it mean that event like 2007, 8, 9 cannot happen? Well, probably it still can happen. I mean, there are a lot of like they call themselves Bitcoin maxis, right? Like Bitcoin is the only currency, others shouldn't exist, and Bitcoin is the real thing because there is no one really who owns it, and there is no creator of it. Well, there is, but we don't know who he is. So it's like completely democratic and many different reasons, but this original idea was that, well, you can stay hidden, you can stay anonymous, you can be a rebel, you can be whatever, and that sparked all this bad sort of reputation things about like illegal money, like weapon or drug money, and it was a very bad reputation for crypto. And now it's slowly picking up, and it becomes regulated, and it doesn't want to be this anarchist, crazy internet money. It wants to be legitimate. Well, at least some portion of crypto and blockchain enthusiasts wants to make it legitimate, so that it can be regulated, so that it can be counted, and it can be managed. If it is managed, then, well, it doesn't necessarily mean that events like 2008 cannot happen. Well, that part of Satoshi's vision we are not yet directly targeting, I would say. Did it answer the question?
Yeah, I think I did. What about the consolidation part? Too big to fail. Like the too big to fail part, let's say FTX or something like that. exchange or something like that becomes, you know, if it consolidates enough and then someone finds a hole in their you know, accounting, for example, how do you avoid that? Because it is becoming more centralized inevitably. So that's also something that I was referring to as a failure from 2008. Too big to fail.
Like a bank or some sort of financial institution is too big to fail, but you don't refer to Bitcoin specifically as it being too big to fail.
I mean the institutions that, for example, exchanges or companies that hold
again, I don't say that this particular thing can be solved so easily. Yeah, there are in crypto space like Binance, you could say, is too big to fail, but well, yeah, the CEO got sued, and then now he cannot be the CEO of Binance anymore. So there are a lot of problems. So I wouldn't say the blockchain or Bitcoin is trying to completely eliminate an option that there could be big or extremely big players in financial sector. I wouldn't say it's trying to target that. I would say it's technologically superior solution that that any large or small financial institutions would realize that this just doesn't make sense to not use that, and that's it. It's like a vehicle or a car. Well, anyone can drive in the car. It's a tool. It's a technology.
Right. So it sounds like it's more about the technical aspects rather than reinventing the.
Again, yes, the Bitcoin and blockchain would consist of the technical and the philosophical element, and I would say the technical element is really going strong and will be prevalent in the future. This philosophical element of like drastically changing the world. I mean, it technically it's sort of better way how to do financial services. Does it mean that governments or countries should like morph into something different? Probably no. I would say this more philosophical piece is still yet to be rediscovered or decided. Yeah, but the technological piece would probably be prevalent.
I think the biggest thing that to avoid such events in the future would be to keep the promise of transparency. That's blockchain about the public blockchains. So you can actually see what's happening there and you can monitor that. So that's something that traditional finance system don't have, this transparency of the transactions. So if the players of the crypto space and DeFi space, Web3 space will keep this promise of transparency, then most likely those events could be avoided. Yeah. So, but again, that's enabled by technology. Yeah. So.
Yeah.
All right. Let's move on. Let's maybe a bit zoom out from this crypto space as such, and maybe as you are building fintech product, yeah, in some sense. So what would be your tips and tricks how to approach the building of the fintech product? Yeah. So how you could share some insights with students.
Yeah. So. I would say one important thing. I don't know if it exactly answers your question, but one important thing that I would like recommend or tell you when you are building a product or any type of project, yeah, definitely try to figure out whom are you helping, and don't concentrate on your personal gain. Try to concentrate on some other people gain, like how are you helping the world. It would actually answer also the question where does the profit comes from, and you would earn more, I would say, if you can answer the question how many people and by what extent you're helping. That's one thing. Another thing I would say that it is there's a business value in having fun. And that's I think is very important piece, that if you put a lot of hard work in something like like 14 hours working day and try to sustain that for a lengthy period, it is downright impossible to keep that pace for too long. But if you are engaged, if you're having fun, if you believe that you are building something important that this world needs, and you are engaged with that thing that you are building, nobody will build it but you. The world needs me, kind of feeling. Then you can find it relatively easy to actually do 13, 14 hours a day, and that is not even hard work, because it's fun and you like it anyway. I mean, so yeah, I would say that's an important piece to be engaged, or try to find something that you really engaged with. Otherwise, it will be very difficult to sustain a certain pace.
So not just look for the money, but actually what makes it tick. And
yeah. And that's how you will become more educated about the field. You would, whenever a problem arises, you would sort of figure out more and more underlying reasons why this problem happens. It would make you understand the field better if you are engaged, if you really are interested in that. And yeah, and the word that I use to describe that is have fun, but in reality it's like be engaged with what you do, be genuinely interested in it.
Mm-hmm. All right, so a little bit about the future. So how do you see how the emerging technologies like AI, of course, and other which are upcoming, virtual reality maybe, how that will shape the financial industry or fintech industry as such? So do you have some already patterns or some maybe technologies that you are experimenting and saying that, okay, this is something interesting that will build something in the future?
Interesting question. Yes. AI definitely is a big piece. I think with AI you can actually normalize markets better. You can make the highs lower, the lows higher. With good prediction algorithms, you can sort of even out or smoothen out the market, if that is done like effectively over with big financial power or liquidity. Then I would say you can, by using AI, you can make the markets more efficient, more less volatile. Yeah.
Mm-hmm. But not only in the crypto space, in general, in fintech industry or finance industry. So
okay.
Yeah. So a bit zoom out of the Web3 space. Do you see already some kind of interesting products that are popping up due to the new technologies?
Yeah, the thing that I said, that crypto and blockchain becoming more and more prevalent in a sort of fintech or finance world, we sort of touched upon that as well. Yeah, on top of that, yeah, I think that the payments would probably be transferred in the future, because it would become more peer-to-peer and easier to use. Yeah, well, crypto definitely allows for that as well, for secure and super fast payments. And regulation is coming, again, crypto related thing, but it allows for large institutions to better access the sort of the benefits of the blockchain and crypto world. And I think that's also a very important piece. Europe is one of the leading economies that push out crypto regulation. It definitely means that crypto is not the magic internet money anymore, but a legitimate asset class. And yeah, we can see that several banks, not necessarily in Latvia, but in other places in the world, are accepting deposits in crypto. all kinds of stable coins are coming into existence, which are pegged to a dollar we already know, but also euro and other currencies, which allows to digitizing a fiat currency, and allows for all the benefits of the blockchain and crypto, but also remains the stability and predictability of the underlying fiat. So, yeah, the money is changing. That's the finance will be different in actually relatively near future. Yeah, quantum technology is obviously one thing, but that is actually probably several decades away. But when it strikes, it would probably strike hard. Yeah,
it would change a lot of things.
Yeah,
not only in the crypto space.
It would change a lot of things in many spaces. So quantum technology pretty much negates all the cryptography that we know of, and including blockchain and but not just that. Everything that we do in the internet is protected with some sort of cryptography. So quantum technology can decipher that. So that would be, but I wouldn't say I see it now. I just hear quantum, like more and more every day, and then a new research is done every day, and so that's probably one thing to look out for.
All right, let's check in with the audience one last time. Question.
Yeah, hello, my name is Dmitry. I want to ask a question, maybe since you're talking that crypto will enter the world, it's being regulated and so on, but what is your vision, since basically what crypto allows us to do is a decentralized way of how we can send the money, and it's not governmentally owned and so on, but the same SWIFT right now is a big leverage of power for certain countries that allows to basically influence how the transactions are happening. Do you think that these big world leaders and players will basically allow us to use crypto as the payment method for any transactions? I understand that it's kind of back question, but what's your opinion?
Yeah, I definitely think so. You could use the same argument, for example, for large oil companies. Would they ever allow like electric vehicles to take off because it's sort of like going against their interest, and so it is a revolution. It is relatively slow, but changes are happening. Again, the regulation. So it means that a lot of new financial services would be more legitimized, licensed, and easy to access to any player. It's really hard. It used to be probably still is really hard to open a bank account if you're a crypto company here in Latvia, because you're probably unauditable, or the bank is scared of you because it doesn't understand what are you doing.
High risk business.
Yeah, right? Like how do we check for like anti-money laundering and other things if crypto is coming in and out of your company? That's like a black box. It's we can't work with you. So now it becomes less and less of a black box, right? And I think it's just a matter of time. It's just a matter of time, and obviously there is resistance, and in a way it's fair. It's a good thing that a challenger has to fight a bit, right? In order to shake the status quo, and yeah, blockchain is giving a good fight, and I think yeah, I think that the benefits are, at least from my standpoint, so visible that it will take time, but this technology will become more and more mainstream.
So the snowball is rolling, and it will get bigger till actually that no one could stop that. All right.
Yeah.
Any other questions? See? Good.
Yeah. You told a lot about thinking about your customer and developing your idea, but it seems to me that based on what you said, some of your customers might be those pump and dump projects in the crypto space. So are they, and what's your opinion or attitude towards those?
Yeah, so we have a couple of values in our in our company, and one of the value is service the market, which pretty much means that whatever you're doing to the market, leave it in a better shape than you found it. So we could do pump and dump schemes. We, in theory, would probably be successful at that, but we just totally don't do that. Because we are not.
That's not you.
That's not us. That's like written in the values.
How to fight others?
How to fight others? Well, it's we haven't really thought about this question. First of all, do we set out to be a police of the crypto world? I don't know. Maybe. Probably you can do that with like a big enough liquidity. I don't think you can run a pump and dump scheme for like a Bitcoin or Ether, right? It's probably something small, and yeah, if there is like a reasonable enough liquidity, then you can at least slow it down. But then again, it depends on how aggressive the scheme is. I don't think I have like a good answer. We have decided that we will not do that, but we have not decided that we will actively prevent that from happening. Maybe it's somebody else's job, right? But we don't think that we are a police.
All right, thank you. Okay, the last question. Do we have the last question? All right, good. So all questions from audience has been answered. Very good. So just to summarize, like our discussion, you have already shared a lot of insight, advices, and opinions. So, but like again, for students, if you would have to give one piece of advice for someone who wants to start the fintech company, not particularly on the crypto space, but like a fintech company. So, what would it be on this advice?
What would it be, the advice? Okay. Probably I could give a lot of advices. One advice I think that's important I already gave about the component of having fun, but also yeah, try to you're young, right? You're in college. I suggest you can check out other places, how people are living somewhere else. Try to see what services are out there, and maybe also be open to using them just to see what are the downsides or the good sides of different services, and be generally open to new things. And obviously you can change the direction where you're going every day, but the one thing that helped me very much is that from a technical standpoint, I tried to build a project in one way. The next project that I built, I said I already know how to do it in that way. I do it in a different way. Don't be scared of something new. Be open to it. Welcome something new in your life. Again, go to places you haven't been, talk to people you haven't talked, do things you haven't done, and that's how you grow.
Perfect. Thank you very much, Krišs, for coming.
Okay.
Advices. Also, small presents from RBS.
That's your gift?
Yes, that's not my gift. I'm not giving it away.
Yeah, very nice.
All right. Before we finish the stream and the event, I just want to share the information about the next event. So there will be another event on May 15. The special guest will be Jits Slaviņš from Mobili, so one of the biggest payment providers, I would say, not providers, but payment solutions here in Latvia. So, and also the next one will be the closing event of this season, the fourth and closing one. So there will be also networking coffee, free food, talking with colleagues and interested, those who are interested in FinTech education and on FinTech. So it's worth coming. So thank you very much. Follow Baltic Finance Center on LinkedIn and see you next time.
Thank you. Yeah. Good stuff. Good stuff.